Good morning, Thursday morning, April 10th. Not really a lot of comments, just a lot of volatility in these markets. So, yesterday was just a wild day. Um, this is what the daily chart on the S&P 500 look like. I mean, you already have these wild swings, then you had 2 days up and down, and then you have this huge move up to the top. Anybody that needed to buy shorts, longs, whatever the case may be, probably bought. So I did short it this morning when it started coming down. But, I've been talking about consolidation for a couple days, and this market doesn't seem like it wants to do much of that, where it consolidates for a couple days before it breaks out. Most of the charts look sort of like this. This is copper, so it doesn't look anything like the other stock markets as far as how big this move was, but all the patterns are the same. You have the sharp move up and then really choppy higher, a break, and then a break. So, this confirms at least a small time intermediate downtrend because you have a lower high, and now once you break this, you now have a lower low. So we have a confirmation that there's sort of a little confirmation that things are going to start moving down. You can see it can do this for a while, maybe, and then it'll break. So I'm not expecting, based on the size of these moves, I'm not necessarily, up to the upside. It may chop around up here um, for a while, and it may sort of be annoying, but um, this is a really short-term chart in this S&Ps, but let me just show you the similar pattern here. So, there's this super strong move up. This is not healthy. You want to see small flags. Like this looks like, steady buying pressure, small flag. Once you got up here, now this is healthier, but of course this volatility was towards the end of the day, so you're sort of kind of thing, but a more normal bull market, it's got a stronger bars here, small retracements, smaller ranges, but now we have this range expansion, this volatility expansion on this break here. Now, of course, this is also represents Europe Open. One other thing that helps them with timing is, rarely do the markets go 3 sessions in a row up or down in any direction. So, for example, if it's up in the US session and it's up in the Asia session, it's probably going to be down in the European session. It's up in the Asian session and up in the European session. It's probably going to be down in the US session. It's usually like two and then one, and it sort of rotates around. Of course, it's not an exact science, but basically, the idea is that you rarely get three in a row. When you do get three in a row, then that's usually the sign of a major top or a major bottom getting put in place. But this is two in a row, so this is the U.S. session. So European session actually was sort of sideways. U.S. session was up, and you can see Asia came up and did this, and now Europe's coming down. So, anyways, like I said, normally I like more consolidation, sideways more for a breakout, but the markets are spending very little time doing anything. And when it's in a bear market, it spends very little time on the top, um, on the upside. So you can see this technically was a bull market before this broke. So you can see it spends a lot of time pushing higher. Okay, it's going to break, pushes a little higher. Now, of course, this is near a major market. You can see the difference. When it makes the lows, it doesn't spend much time here. It spends more time at the top. Whereas now we're in a bear market, so now, the rallies are small. This was sort of an intermediate low, so it didn't spend a lot of time here. But then finally, when it gets ready to go, it almost doesn't spend much time here. There's more time here. So now it's going to start spending more time in the lows, and it won't spend as much time at the top. So I try to be eager to get in, make sure I don't miss a big move down. That's sort of what I'm doing. So because there was such a big move up on the upside yesterday, I think that we sort of need to, when the market opens, so it's 5 a.m. Eastern time. So, for example, when the market opens 8 a.m. Eastern time or 9:30 a.m., whatever it is, there will probably have to be another push up. But it could be down 2%, and then maybe at the market open it'll be up 1%. But there'll have to be a little bit of follow through buying from yesterday as these funds and things need to meet their margin requirements. But anyways, you can see it's a mixed bag right now. So when I first shorted it, this my open P&L here, it says 1600 up, down 3000 in the Australian dollar, down 1000 in copper, up 3000 in crude oil. Between this S&P 500s and then Nasdaq, we're up about 1000. Copper, we're down about 1000. This is just sort of back and forth stuff. We're pretty much flat. But this did go down. I was down as much as about $8,000 not too long after I entered these positions, just on these small bounces, just shorting here, it bounces up a little bit and comes down a little bit. I did sell one silver contract, but not very much, just to watch it, I guess you could say. So I'm sort of doing half to three-quarter margin on most of these, just based on the recent volatility. So one contract in silver, it's 16,000. Nasdaq one contract, so they've upped the margin requirements. It was 25,000. Now they've got it to 32,000. They're upping it because of the volatility. The S&P 500, I'm short two, so two margin requirements for two is 45,000. So that's about 22,000 per contract. So you can see that that's up from what it was before. I probably need to update my sheet here. I had, so, S&P 500 is now 22,000 and Nasdaq's 32. So, anyway, this is the amount of contracts I'm supposed to be trading. Crude oil says 17 and I sold 8, so about half. So that's sort of what I'm doing. Australian dollar, it says less than half of normal. So that's sort of what's going on. So coffee is sort of a funny to try to trade this because of the delayed quote. So it says it's at 356 right now. Now I wanted to short it, and normally I wait for momentum to the downside. But if you look at this, this is actually where it closed yesterday. This chart's sort of wrong, but you had this open up and it gapped up, and you see this sharp move down. Usually after the first bounce is a big sell. It's that concept of the head and shoulders, that right shoulder. He calls it a right shoulder. Um, so you've got the head, let's say the head here, and then you got the shoulder. So this is playing out on a short term time frame. So the shoulder means failure to make a new high. So here's your right shoulder, and then the break. And then you're supposed to short it. It comes back up to the bottom of this, and you're supposed to short it here. So that concept is sort of in effect here. It's a pretty reliable pattern. It happens on very, very many time frames, um, it says the price right now. So it says here my delayed quotes. It says it's up 14. The price is 356.45. But live quotes, if I click on this is this website, 356.05. Okay, so it's about the same as what it was 15 minutes ago. If I look at this 1 minute chart, you could see, so, you had this strong close, huge gap up, but immediately, those are just shorts getting hit up here and then they come down. So I'm sort of expecting this. It's a little bit of buying here, probably just programmatic buying based on a strong move up. But once it starts to move down, I expect there to be selling and it'll go back and make new lows with maybe within the next 2 days or something. So, anyways, this is more selling a retracement rather than, momentum off some sort of high. I usually wait for a little confirmation, but anyway, you can see things starting to move in the right direction down, um, cautiously. Silver pretty much flat. This is just pretty much flat, I guess. Stock market moving a little bit, crude oil moving a little bit, but we're just sort of waiting on copper. I'm sure copper will catch up. Australian dollar will catch up. But yeah, the crude oil looks like the best one. So let's look at the crude oil real quick. Looks like it's going down the most. I mean, look at where it's at. So it's already, I guess we could look at this chart here. But, this huge rally yesterday. So look how big this was. So you came all the way up here. So this has plenty of room to fall. And it's certainly in free fall mode right now. So, look at these are sharp. You don't have a lot of chance to get short on these. These are sharp. You just don't have much time. I mean, when you look at this and it hardly bounces, but you have some time to sort of see, okay, it's not going to go back up. But just like when you're in a strong uptrend, you don't have a lot of chance to buy it. These look like V's. V's here. These are all sort of V's. Don't have a lot of time to buy in the bull market. So the same thing in a bear market. You just don't have a lot of opportunity to sell. And now we're in a bear market, so you can see these V's always making a V up, and then it'll spend a little bit more time up here, V up, spend a little more time up here. So I sort of I was expecting a little bit more of this thing. So I'm a little bit nervous about, now that we had this huge rally up, maybe it'll try to retest it one time. That's usually what I'm expecting. But like I said, once the bear market, uh, you get deeper into the bear market, it spends less and less time on these rallies. They're just real short, quick rallies up, and then they start going down again. So very impatient. Usually, I'm more patient in waiting for some sort of a setup, some sort of box, to get made at the top. If I just go back and look at what a box looks like, but these rectangles at the top, um, we call this a box. I mean, they come in sort of many shapes and sizes, but these where's my rectangle? And just sort of draw this sort of thing. Can't really call that a box, but you have two tests up, so this is a double top. That's again, these are V moves, so there's not a lot of time there. But this is really the sort of thing I'm talking about. So let's draw another rectangle here. So, which is multiple tests. Again, it's not an exact science, but here's a top, here's a top. So you sort of have a range for me. Here's a bottom. It comes down here, tests that bottom. So have to start shorting it once it comes out of this box. Uh, so it may come back. That's why I say it's a little bit scary. It may come back up, but we're counting on. The other thing we're counting on is on a market open, we expect traders to come in flat. They've met their capital requirements, whatever the situation is, and so you expect more follow through. Whereas if you trade these boxes later in the day, you end up getting whipsawed a lot. But you sort of expect fresh cash coming in, fresh new positions, people reassessing what they're doing. Um, and so that's sort of part of, why it's important I get up early in the European session. So anyways, um, NASDAQ, okay. This one, okay. Crude oil coming down. Silver about flat. The reason I'm very cautious with silver is silver trades with gold, and gold's really strong right now, so we're gaining some of its footing. So I'm not gonna be too patient with silver. If gold starts shooting up and it starts going up with it, but capital is probably in short supply right now, so I don't expect a lot of fresh cash to get go into that market. Copper's about flat. I've got 5 contracts. It's pretty volatile, so it'll be around 1,500. That's just you know, $4, and it's my short is at $4.32 a pound, and it's at $4.33.5. So it's literally, a penny difference in price. It's not a huge deal. But anyways, we'll cross our fingers. Always avoiding getting caught in some sort of hailstorm out, but we had that yesterday. So these news stories that they use to sell to drive these markets up or down. You can't keep doing it. People just it's the game is about money. The headlines are irrelevant, but people start to believe in them because they do cause hysteria and quick market moves, but that's not why markets actually move. Markets actually move because people's capital, people putting money to work, people making money, people losing money, whatever they're doing urgently that day is the way the markets are going to move, buying or selling, and the headlines are just gossip, just a soap opera. So, um, but they provide opportunities. So, anyways, all right. So, see here, coffee. It says it's at 358.60. That's the direct. See what it actually is, and it's back to 356. So that's good. That's good. We're not continue this little gap up. Gaps are usually, in the end, just like any other, goes down, you buy it. Buy the dip, goes up, you sell the rally. It's the same idea, just a lot of times. I mean, a gap does tend to continue in the direction of the gap, typically, if it's in the direction of the trend, and it'll it'll continue in that direction, but not for very long. It's like it'll have to go that way. It'll go that, let's just put it this way, it'll go that way when there's a gap, overnight gap, it'll stay up there longer before it comes down. Probably continue in that direction before it comes down. I mean, sometimes for a whole day, sometimes half a day, sometimes for the morning, because there's just more buyers because they've got to cover their butt because they got on the wrong side of something. So they didn't have as much opportunity to cover on the way up. So they just spend more time. So that's sort of the deal with coffee here. It's gonna spend a little time up here, but we're slightly in the money now. We're slightly in the money. So if I short at 356.50, let's just say it was at 355.50. That's $375 per contract. I have 3 contracts. So rather than being down 2,000 in coffee, I'm up about 1,000 in coffee right now. So down 4,000 in the Australian dollar. 25 contracts, so I have a decent size in that, so I'm not too concerned about that. And the currencies don't tend to move too quickly. But definitely keeping an eye on that. Don't like to see it moving against me. So, all right, that's it for this morning. Checking out.